I usually don't do a video on a Thursday, but this is an emergency. The Dow dropped over 1,700 points in a single day. The fifth largest single day drop the Dow has ever had in all of history. Now, my name's D7 here with Grok Trade, and I've been trading in the live markets using technical analysis 28 years, and I own a hedge fund. Okay, for no other reason than that, might want to listen to me a little bit here. I've been using technicals a long time. Now, we're going to be looking at the U.S. bond market. This is the 10-year versus the 2-year bond, okay? And the inversion. We've been talking about this for months and months and months, saying this was coming. What is this? The recessionary pullback in the markets. Now, anytime the 2-year, 10-year bond goes inverted, that means it drops below the zero line. See the zero line? Anytime it drops below it and then corrects and goes back above, I plot this vertical line, and that tells me that we are on the ticker. The time is a ticket before the markets are going to drop. Average, about 100 days. Guess what? We're about that since we inverted the last time. So what we're seeing here, we had the longest and deepest bond yield inversion we have ever seen in all of history. And then we righted itself. We righted itself back in August and then of 2024, August 24, righted itself. And then we go and get a big fat M for murder. Do you see that M for murder up there? And the S&P 500 just has come crashing down. Okay. Does this surprise us? No, because we've been talking about it. Go back to my other videos that talk about this bond yield inversion. But what we really care about right now is what's going on here with the markets. And I'm saying we got significant trouble. Falling wedge on the S&P 500 ETF, Spider, is supposed to be bullish. But instead of breaking out, we come crashing down. Now the question is why? Everyone's pointing to the tariffs. Yes, that's the catalyst. The markets have been looking for a reason to sell. Don't be hyper-focused on one event that all the media is talking about. Tariffs. It's reciprocal. Guys, we're just putting the same tariffs that we are being subjected to. Everything from 10% to 50%. The markets are using this as an excuse. We always do this when we have an extended run to the upside, which the markets have had. Big extension to the upside, and then we have to retrace. A retracement is very healthy for the markets. And I have always said what you're looking for is a one day where the markets drop 1,000 points, 1,200 points, 1,500 points. That will be the telltale sign that the recessionary pullback has begun, okay? And the high is probably already in. So in this example, this is likely the high, statistically speaking, that we won't see for the next 18 months or so. Usually recessions will last about 18 months. We have this falling wedge, which is usually bullish. Instead, it broke down on that news. Now, here is what we are watching for. This is so important that you understand what I'm getting ready to say. I'm going to get into the technicals here. Anytime you get this falling wedge and it breaks that, usually you should see it could just continue down. The one thing that you guys have learned from us is we teach something that nobody else teaches, and that are the death hooks, and the death hooks are a reality in trading. What would that be here? That would be us breaking down and it reversing and heading back higher and giving us a jab where we correct itself and come back up. If so, that is very bullish. Look for a rally to the upside, my friends. Look for that to happen. If it drops another couple of days, maybe hammers out and then rallies up and then gets back up into here, look for a rally, and this thing could just boom for some time. Then the question is this still our high, or are we going to go up and challenge that and maybe get higher than that? Now, here's where the problem is, okay, for bulls. The problem is if we get below this trend line like we are now, and it did drop on big volume, friends, and it stays under, that is problematic. Now, I know that we had the SOM rule saying we've been in a recession. We had the inverted bond yield None of those have been wrong, or they're not wrong very often. So statistically speaking, I got two indicators, if you call them that, barometers, that are seldom ever wrong, and both of them agreeing that we're going into a recession. And I've always said, how do you know it's happening? Always watch for a 1,000 plus point day in the Dow to drop. Normally, you'll see an 800 point rally the very next day. So will we see 800 points tomorrow? The odds are 100%. We're going to be up there quite a bit. 500 points, 600 points, 700 points, 800 points, 900 points. I don't think it'd be over 900 points, but I think it'd be over 300 points. I think the odds are that we're going to be around 700, 800 points. Okay, now let's see if I'm right or wrong. But if we get that and we get a continuation, it comes back above this trend line, guess what's going to happen on the RSI, the relative strength indicator? That's what we're looking at here. If the markets go up, that means this is the low, and that will go higher, okay? If this goes higher, that means this low is lower than this low, if that happens. So if this does a V shape, heads back up here, this will be a higher low than this. Why is that important? You guys know, you've been with me long enough. It's because price action is giving us a lower low. If we get a lower low here, what happens? A lower low here, but what we end up seeing is actually a higher low. And if we get a higher low on that, and we already have one in the making on the MACD, higher low, we have a good old-fashioned bullish divergence. And that's going to be really good for the bulls. And that's if and only if, my friends, the market, in just closing out this week, shows us some promise of the markets going higher. If it does, we could be dancing, my friends, on the bull side. Doesn't mean it's going to. If it stays below this trend line, all this bets are off the table if that happens. I have to erase that and this because those levels will be violated. And this will just continue down. And then what was shocking, we went down 700 points and the circuit breakers didn't kick in and kill this slide from happening. But a lot of today's slide was actually on the initial gap lower. I think that's why we didn't get the circuit breakers to hit. So if we go here to the diamonds, what's interesting on the diamonds, we're at major support. Support. We're right there at that support. But it hit that support on huge volume. It broke. It put just cracks through the ice. So the bowling ball hit the ice on top of the pond, the frozen pond, and so it's now weakened. So the chances of it breaking through are pretty good. MACD bullish. It's given us a bullish type divergence. Same thing with the RSI. So this thing can get bullish on us, gang. So if we do turn around, that'd be great. The Nasdaq, if you look at this, same as the S&P 500. We're down below a major support line on a falling wedge. It should be bullish, but it wasn't. It broke down. Bullish divergence. We're working on a bullish divergence on the RSI, very powerful. IWM, this is the Russell 2000, same thing as what we're seeing in the Qs and the S&P 500, exact same scenario. And if you go here to the financials, same thing. Major support. Look for a bounce. We're at major support there, gang. And just like we had the bearish divergences that showed that this thing was going to break down, what do you think is going to happen on this? If you got bullish divergences taking place, it should get a good bounce. Silver bit the dust, down 6%, dropped down below this trend line. It came up, challenged it, and then came back down. All right. I'm not going to get into any others. I'll get into all this going into the weekend edition. Don't miss it. But I want to share with you, guys, don't get too excited about the tariffs. Again, it's just an excuse for the markets to sell, and the people are going to start unloading. We're going to see more follow through. We're going to see the markets drift out. But the question is, what's going to happen on the next leg down? That's the big question, because we're going to get another leg up. That leg up will come and it's going to happen on little volume, because big money, smart money, is going to say there's our opportunity to unload money. They will unload and start to sell into that strength if and when that happens. And that will be the time you will see it fall off a cliff, and we will get into those bearish territories. Right now, we're in what's called a correction. We're not in a bear market yet, but we're in that correction mode now. We will go into, in my assumption, from my living through many of these recessionary pullbacks in the markets, these market corrections, that we're in one now. It's coming. I expect the markets to push back at some point, and then I will really be watching for a few things. Here's what I'm watching for, okay? I've already seen the bond yield inversion correct itself. I've already have seen the Dow drop more than 1,000 points. That happened today, 1,700 points. I'm looking for a softening of the GDP, okay? I think it got revised to a 2.4, if I remember correctly. And that will be, I believe, April 30th when that will report. The question is that GDP, will it come in light? Will it come in lower? That's a very big one. And also jobless reports. I think we're going to see the unemployment rate spike higher. I think we're going to see that because I can see it all around me right now. And that is very typical to a bear market. Now, you guys wanting to blame a president that's only been in for 2 months for all of this is kind of insane. Markets we have bull runs and bear runs, and when you get this ebb and flow that takes place, you never know which president will be in at any given time. The markets were propped up in the last administration, and if he had another term, I promise you it would have been going down just the same, because that's how the markets work. We look for a 5-year rally, 2-year drop. That's kind of a good rule of thumb, but we've been up 12 years, gang. That's a long time, 12 years plus without a significant pullback in the markets, outside the COVID drop, which was significant. So those are the things I'm looking for. Now, a lot of you guys don't understand what we're doing. We're using AI to do daily commentary, and that's just so we give you more content. We want you having more content each and every day. We're trying to do that to say, if we give you more content, will that be beneficial to you? So we're still, Mark and I, we're still doing our videos as we always do. So you not only do you get our videos now you get Grok Guy and Grok Girl doing their podcast, which is usually 5 minutes to 8 minutes, and it gives you just the highlights of what happened in the markets today. Highly recommend that you subscribe and that you do that. We do have a mentorship. We do teach. The one that we have coming up this month is really good for the ladies. If you are a female trader, especially if you're brand new to trading, this is one you probably want to be in, because we have a few gals in this one right now, and 2 of them are as beginner traders as you can be. Whew, that was a lot. Now, so those are some thoughts for you. If I've earned a like, feel free to give me a thumbs up. I didn't run any ads on this, since I didn't run any ads, that by itself is worth a like, I think. So feel free to subscribe. Take care. Share this with a friend. See ya. Bye. Guys, why are you still here? You just watched my video and now you're still lingering around. Might as well be with you now that I have your undivided attention. Listen, if you haven't done so yet, I highly recommend putting in a foundation of trading, your foundation of trading through a mentor. For learning to fly a plane, you wouldn't just go through ground school before you start flying in the friendly skies. What you would be doing, though, is going up first with your flight instructor. Same thing if you're going to learn to ride a bike, you better have somebody behind you helping you ride a bike. Surgery, you're not going to read a few books and do heart surgery. So every principle in with being guided by a mentor, let finances be this. If you're a trader, you from amateurs to professionals. Mentoring will do that for you. Anyway.